Hi, this is Laura Kuntz, and this is my first foray into doing a video recording of our quarterly market update. And this period that would go from January 1 of this year, the beginning of the year, till March 31. So my comments are as of then. Um, Please do not hesitate to share this recording with others. There's been volatility in the market, and our clients, as suitable, have a whole number of positions that are positive, and many people may not know that that is the case for them or what they should be looking at investing in. Volatility can be a concern. And we're happy, of course, to talk to any of our clients at any time. It's part of our service to you. And we're happy to chat with others too, that are important to you if helpful. So let me share my screen and run through our current thoughts. But what I would like to start out with is a little bit of information on our newest financial analyst, and that is baby Anthony, who is 8 months old, my grandson, of course. Of course, we start them young here. He's already in training. When his mom, my daughter Rachel, took this picture, I said, "Oh, can I share it with our clients? Can I share it with our friends?" And she gave me permission to do that. So I'm excited to share that with you. I also wanted to share just a little bit about our team. We meet every month, led by my partner, Mallory Kretman, to talk about tax reduction and other financial planning strategies. We also meet once a month to talk about the investment markets. And of course, we're thinking about the investment markets every day. But I just want to give you a sense of what goes on behind the scenes on your behalf. So if we talk about the investment market a little bit here, the blue line is US stocks. And notice how they have tumbled since about February 19th. And that's when the talk of tariffs started. Now, stocks were highly valued at that point. They were at about 22 times forward earnings on the S&P 500, 22 times expected earnings. That's highly priced. So any significant downward catalyst could have created some volatility. In this case, the downward catalyst was certainly tariffs, the uncertainty around tariffs, the cost of tariffs, and we'll talk a little more about tariffs. But what is so interesting, if you can follow my cursor, do you see that US bonds, the purple line, are up? So as money came out of US stocks, it went into US bonds. What a marvelous relationship to take advantage of. And that is one of the purposes of bonds in our clients' portfolios, which we invest in bonds as suitable, of course. And then international stocks, how interesting. That's the green line, if you see my cursor, up 8%. That's a 13% difference from US stocks. And we'll talk in a minute why international stocks are up so nicely. Speaking of tariffs, let's give an example. Tariffs are just a tax. They're similar to a tax we would pay if we went to a store and we paid a sales tax. And the importers, the buyers, just like if we went to a store, we're the buyer, the importers pay this tax. So for example, let's say that I own a car dealership. I don't, but let's say I want to put 100 cars on the lot in my car dealership. I've got to go buy some cars. Well, if I go buy a Hyundai or other cars from international sources, and that gets to be tricky because car parts come from all over the place and they're compiled in all sorts of different places. So what is really an American-made car versus not is tricky. But let's say I buy a car as an importer for $50,000 and there's now a 25% tax or tariff, $12,500. Now I've paid $62,500 to put that car on my lot. So now I need to ask the consumer not to pay the 50,000, but the 62,000 plus profit. So tariffs do tend to increase prices, and that is called inflation. And in fact, the Federal Reserve Board at their last meeting, their March meeting, they changed their projection for inflation via their preferred gauge from 2.5% projected by the end of 2025 to 2.8%, largely due to tariffs. And we will stay on top of their thinking and other thinking on where inflation may be going. Now, tariffs can also slow down the economy. They can be a weight on the economy because inflation can be a weight on the economy. So when cars cost more, now people might not buy a car. They might buy a smaller car. They might wait to buy a car. So the Fed changed its projection from moderate growth of 2.1% for 2025 to 1.7%. Now, the argument for tariffs is that they bring better paying manufacturing jobs back to the US. And it is certainly true that over the last 50, 60 years, a lot of manufacturing that previously was done in the US started being done in areas where wages were lower. And so will tariffs bring manufacturing jobs, better paying manufacturing jobs back to the US? I think to some degree. So then is it worth it? Well, it probably depends on, that's probably in the eye of the beholder. If you get one of those great manufacturing jobs, you probably love tariffs. And if you're suddenly paying, 12,500 more for a car, you probably don't like them so much. So those become some of the questions with tariffs. Now, tariffs are potentially a weight on the economy, but there are some policies that the current administration supporting Republicans are espousing that can help the economy grow. Those can be lower taxes, lower income taxes. They can be deregulation. A challenge we have today is that some part of the benefit of those is already priced into the stock market. After the November election, the stock market bumped up. It was called the Trump bump by many commentators. And so some part of expectations of lower income taxes and deregulation are already built into the stock market. We already talked about the benefit of bonds. Let's talk about international stocks and, in fact, some of the specifics. International stocks have been exciting. There's no question about it. One of the reasons they are exciting is the EU is rearming, and Germany is a great example of that. So the German political system has just agreed to spend perhaps as much as close to $1 trillion on infrastructure and defense over the coming years. NATO was, in some ways, it was created for many reasons, but in some ways it was created to keep Germany and Japan out of the war business because of World War I and World War II. And now Germany certainly is looking like they're coming back into that business. A benefit of the EU rearming is the EU has been in a bit of an economic malaise, I would say, in my opinion. And entrepreneurship has not been as strong as perhaps it could be, especially in technology. So as Germany and the EU rearm, I think we're going to see a much greater use of all types of technology. It may be the catalyst that brings them out of that malaise. The other big story going on in our world is Asia. Now, Asia is China and Indonesia and Japan and South Korea. We all know lots of countries in Asia. The big story is the technological chops that China is showing. A couple, 3 months ago, they came out with DeepSeek, which is an artificial intelligence application that rivals ChatGPT, for example. But they claim they made it much more quickly and at much less expense than ChatGPT or other types of artificial intelligence were made. And that's very exciting because that could benefit everybody. But China did that. And so there's some disagreement over how much faster it was made or how much less in cost. But still, it seems like a very significant opportunity. The other big technological improvement coming out of China is they have created, a Chinese company, BYD, has created an electric vehicle that charges in just 5 minutes. Amazing, huh? The same amount of time it would take us to go to the gas station and fill up. China now does sell 60% of the world's electric vehicles, sells around the world, in China and around the world. And plug-in hybrids seem to be what's really popular because it can swing both ways, of course, fossil fuels and electric. China also sells about 80% of the world's solar panels. So they are very, very well set up when it comes to renewable energy. China had been in a funk the last few years. Their people bought way too much real estate that was open, not rented, etc. That has had to be worked through, chewed through. There's been government stimulus, and the positives out of these technological innovations and government stimulus is has spillover effects in Asia as well. So that's part of the excitement in the international markets. If we think of what Laurel Wealth Planning is doing about these trends, because they are very important trends, as suitable, as appropriate, we're allocating about 27% of client stocks to international stocks. About a third of those to Europe, about 2/3 to Asia, and the rest of the world. That's something that we watch very closely. We constantly consider whether we should increase that, not just at our monthly investment committee meeting, but quite frankly, I think about it daily. We've also increased, as suitable, China stock market exposure. At one time, when China was really struggling, we didn't invest in their stock market at all. Again, as suitable, but we have changed that and are invested modestly in China. As suitable, we are overweighting shorter term bonds, which are a close relative to cash and appropriate for volatile times. And of course, our clients know that we coach you to be contrarians, that if the stock market, US stock market, any stock market falls, continues to fall, and good prices are uncovered, attractive prices, we think you should not only hang in there, but buy more of what might be on sale. And we have set our target prices, as you see on that slide, down about 11% from March 31 as a nice price, and down 18% from that same day as a good price. So we would love it. I would love it if you give me feedback on this video, give me feedback on this presentation, if you share it with others as you deem appropriate. We've got to, of course, share our definitions with you and share our disclosures with you. And now, in fact, I'll even stop sharing and tell you how much we appreciate serving you, our clients, and being helpful to you. During this time of volatility, it does feel so good to know that we are being helpful. So check out your results on your LWP portal. Call us with your questions. Call us with your comments. We appreciate them. And if you're someone who doesn't work with us yet and are interested in speaking with us, please just give us a ring. We'd be delighted to chat with you.